Assalamualaikum. My name is Qistina from class L01. So today I'll be discussing the Sukuk Murabahah program between the CIMB Investment Bank and Suria KLCC Sdn Bhd. Let's start with an introduction to Sukuk. Sukuk often referred to as Islamic bond. It is a financial instrument that complies with Sharia principles. Unlike conventional bonds that involve interest payment, Sukuk represent ownership in real or tangible asset, usufruct or services. This ensures that all transactions are asset-backed and adhere to Islamic ethical guidelines, avoiding riba or interest. Sukuk are not just about compliance, they are a vital tool for financing large-scale infrastructure projects, fostering financial inclusion, and enabling Muslims to invest in global capital market while staying true to their faith. Furthermore, the Sukuk have gained recognition in promoting sustainable and socially responsible investment, such as the Green and Social Sukuk. Now, let's focus on the Sukuk Murabahah program initiated by the CIMB Investment Bank and Suria KLCC Sdn Bhd. This program began in December 2014 with an initial ceiling of RM600 million. Over the years, it was expanded to the 2 billion by December 2023, reflecting its success and the strategic planning of the Suria KLCC. The latest issuance has a tenure over 10.5 years and offers a 4% annual profit rate, making it attractive to both local and international investors. The Sukuk received a prestigious AAA rating from RM, which is rating service, which is a testament to the issuer's financial stability and the robust nature of the underlying asset. Now, let's delve into the structure of the Sukuk Murabahah program. This program is based on tawarruk arrangement, which is a mechanism in Islamic finance where commodities are bought and sold to generate immediate liquidity. In this case, Suria KLCC purchased a good from a supplier on a deferred payment and then sells them to another party for immediate cash. The funds raised are allocated to Sharia compliant users such as refinancing existing the obligation, funding acquisition, or covering operational costs. This ensures that the program adheres strictly to Islamic principles while maintaining transparency and minimizing the risk. The Sukuk Murabahah program is a model of Sharia compliance. It ensures that all financial activities avoid interest, excessive uncertainty, and other prohibited elements. A Sharia board oversees every step of the process, from structuring the Sukuk to ensuring that the proceeds are used for permissible purpose. For instance, the funds have been utilized for property development, working capital, and refinancing Sharia compliance obligation. The rigorous oversight instills confidence in investors as the Sukuk are certified as ethical and transparent investment option. Let's examine the risks associated with this program. Firstly, credit risk, which pertain to the issuer ability to meet payment obligation, is mitigated by the Suria KLCC's AAA credit rating and strong financial performance. Market risk, influenced by the macroeconomic condition and investor sentiment, is managed to the diversified Sukuk maturity profile and monitoring of economic indicators. And lastly, Sharia compliance risk, which arise from the differing interpretation of Islamic principle, is addressed through ongoing governance and documentation audit. By adhering to proactive risk management, the program safeguards investor interest while maintaining its integrity. Comparison with conventional bond. How does Sukuk differ from the conventional bond? So, unlike the bond, which is a purely debt instrument, Sukuk represent ownership in tangible asset. Returns depend on the performance of this asset rather than the fixed interest payment. Sukuk are ideal for ethical and Islamic investors as they are aligned with the Sharia principle, ensuring transparency and ethical use of funds. However, they also face challenges such as higher compliance costs and less liquidity compared to conventional bond. Despite these challenges, Sukuk provide a compelling alternative by balancing financial return with ethical investment values. The Sukuk Murabahah program has demonstrated strong financial performance. The latest issuance of RM2 billion, offering a 4% profit rate, attracted significant investor interest. Suria KLCC's stable income from assets like the Suria KLCC Mall has reinforced investor confidence. This program's success highlights the growing demand for ethical and Sharia-compliant investment. Its expansion from 600 million to 2 billion underscores the trust investors have in its financial and operational track record. In conclusion, the Sukuk Murabahah program exemplifies the potential of Islamic finance in providing the Sharia-compliant asset-backed investment opportunity. Its success, marked by the strong financial performance and investor confidence, reflect the growing appeal of ethical finance. However, challenges like complex structuring, higher costs, and limited liquidity need to be addressed to further enhance its attractiveness. By broadening the investor base and ensuring strict compliance, Sukuk can continue to grow as a key pillar of sustainable finance. That's all from me. Thank you.